Imagine waking up on an ordinary morning, a morning where traders, investors, banks, and hedge funds prepare for another day of fast-moving global markets. Everything looks normal. The world's biggest derivatives exchange, CME, is powering up just like it does every single day. Millions of contracts are ready to move. Billions of dollars are waiting to flow. The heartbeat of the financial world is steady. And then, in a single moment, that heartbeat stops. Without warning, the CME exchange suddenly freezes. A cooling system failure hits the data center, and within seconds, the world's largest futures marketplace goes completely silent. No oil futures, no gold futures, no gold futures, no currency trades, no equity index movement, no Bitcoin or crypto futures. Everything simply stops. And when CME stops, the entire global financial system feels it. Across the world, traders stare at their screens in shock. Banks activate emergency risk alerts. Hedge funds pause their strategies. Retail traders keep refreshing their apps, hoping it's just a glitch. But it isn't. This is a real, global trading halt. The kind people talk about for years. In those first few minutes, nobody knows what happened. People wonder whether this is a cyber attack, a geopolitical event, or the start of a financial crisis. Whenever markets freeze, fear spreads faster than information. And on this day, fear spreads everywhere. Liquidity disappears. Prices stop updating. Market chat rooms explode with panic messages. Analysts on TV scramble to understand the situation. And in living rooms, offices, and trading floors around the world, millions of people ask the same question. What does this mean for the markets? And for my money? For some people, this wasn't just news, it was personal. Imagine a small retail trader who had a short position in crude oil, waiting for the price to drop so he could close his trade and secure a profit. Suddenly, his platform freezes. He can't exit. He can't hedge. He can't protect himself. All he can do is stare at a frozen chart, hoping the system comes back before the market moves against him. Think of a farmer in the Midwest who uses futures to secure the price of his crop. His entire business relies on being able to hedge, but his contracts are frozen too, and he has no control. Moments like this remind us that behind every chart, every contract, and every price movement, there are real people with real stakes. As the outage drags on, tension builds. Markets hate uncertainty more than anything else. Even when the problem isn't economic, even when it's just a technical failure, the emotion it creates is real. In those moments, the world is reminded that even the most advanced, most powerful financial systems are still vulnerable. Eventually, after hours of pressure, engineers stabilize the cooling system. Servers restart, connections return, and finally, CME announces that trading is restored. Slowly, the heartbeat of the market returns. Prices begin to update. Liquidity rebuilds. And the financial world breathes again. But the story doesn't end there, because once the dust settles, a deeper question remains. What does this event mean for investors? What lesson should ordinary people take from a moment like this? The first lesson is simple but powerful. No market is too big to fail temporarily. Even a trillion-dollar exchange, the backbone of global futures trading, can go down because of a mechanical issue. This tells us that relying completely on the market's stability is a mistake. Systems are powerful, but they are not invincible. The second lesson is about risk management. Many people think stop losses, hedging, and diversification are boring concepts. But days like this show the truth. Without risk control, trading becomes pure gambling. When the system freezes, only those with proper risk management sleep peacefully. The third lesson is for long-term investors. This outage was a technical failure, not an economic crisis. Markets recover. Prices stabilize. Life moves on. Long-term investors should never panic over temporary noise. There's a bigger idea here too. As technology grows stronger, it also grows more fragile. This outage also highlighted how people react differently during uncertainty. Some panic instantly. They fear the worst and make emotional decisions, losing money not because the market fell, but because they couldn't stay calm. Then, there are the smart investors. They know unusual events create opportunities. They know markets have survived wars, pandemics, and crashes. A cooling system failure does not change long-term opportunity. Smart investors stay patient, disciplined, and use fear to their advantage. So what should you take from this event? The message is simple. Your financial future should never depend on a single moment of panic. Markets can pause. Servers can fail. Trading can freeze. But your mindset, your discipline, your long-term vision should never freeze with it. Every crisis is a test. Some people failed that test. Others pass it and grow stronger. At the end of the day, the CME outage will be remembered as a rare technical event, dramatic, Surprising, but temporary. The markets restarted. Prices normalized. Global trading continued. What matters is not that the markets froze. What matters is how you react when they do. So the next time you see a headline that says market halted, remember this. The market isn't ending. The world isn't collapsing. This is just another tester reminder that discipline and patience are more powerful than panic. Because financial markets may freeze, but your mindset should never freeze with them. Thanks for watching. If you found this helpful, be sure to like and subscribe for more content.